So yes, I'm pretty sure that you guys can see my screen. Right, so today we'll be talking about the basic things that you need to understand, right, before going forward. So what we'll be covering, right, it will allow you to understand market structure. It will allow you to understand order flow. It will allow you to see moves before the fact, basically, right? It will allow you to know which liquidity pools to target, which ones to use for your anticipations for reversals, and so on. Right? So, first, if you're brand new, these assets are the assets that you should be focusing on, right? Not gold, not silver, not the dollar index. These assets that you see on the screen right now are the ones that you should be focusing on, right? That's it. So, this is the futures triad, right? We have the S&P, we have the Nasdaq, and we have the Dow, right? You understand? So you cannot come here, right, and try to apply the concepts that we teach, the concepts that we have, the concepts that we share, and just use one asset. No, you need three assets at least. All right, so here we have the triad, the S&P, the Nasdaq, and the Dow. The next thing that you'll need to understand is basic SMT, right? In the future, down the line, as how I have shared with my private students, right? If you get into that batch at the end of the year, we'll be talking about the specific times, right? We don't have all the time in the world right now to speak about this, right? And then at the same time, I have things that I need to be taking care of at the same time, right? But just to give you a gist of how everything works, right? We're going to go over something that we had spoken about prior to it happening, right? So at the all-time high for the S&P and the Nasdaq, you can see that this high right here breached this high. Pretty simple to understand, right? The same thing occurred for the Nasdaq, right? For the Nasdaq, there was a breach. Liquidity, the same thing occurred for the S&P 500, but for the Dow, you can see that that did not occur, right? Not only did it occur on this, right? This is what we would call the first stage, right? Typically, we use two stages, but there could be three, there could be four. Right. So now we're going to put a little bit of lipstick on the chart. Not a lot, just a few lines, right? So this high was breached, after which, what occurred after? We had a similar phenomenon occur right here, right? This was a failure swing, right? And this is what we know as sequential SMT, right? Here you can see that this high was Friday and this high was Monday, right? So when we talk about sequential SMT, it's not just between Monday and Tuesday, Tuesday and Wednesday, Wednesday and Thursday, right? There can be a cracking correlation between Thursday and Friday as well, right? And when the 24-hour trading is established, then that's the time when we will have to use DT, right? So we'll just have rolling sequential SMTs. It won't stop, right? And of course, if you understand my work, you know that this is fractal. So you can take that information that I just said is fractal and just apply it elsewhere, different time frames, and see the results, right? So here we had a turtle soup run and stops. On the first stage, which is the larger Kriging correlation of these two, on the second stage for the S&P 500, we can see that it's a failure swing, right? Here, for the NASDAQ, we can see that the first stage is very similar, right? We have a run and stops, but then what occurred? Right, the second stage was what? A turtle soup here, right? So here we have the first stage being the same, and the second stage being a cracking correlation, right? Another thing to point towards why we expected lower prices, is due to the fact that the Dow was slouching, right? So it's pretty easy to see this, right? When you see the Dow so far away from the all-time highs, right? And using what we teach, right, DT, we can anticipate that this, or we could have anticipated that this asset would have breached, this asset would have breached, and the Dow would not breach. But it just doesn't stop there, right? And this is where some people may see one leak video, right? And then, they use a cracking correlation, then they use it wrong, right? It's not every time that a sequential SMT will work. There must be a higher time frame premise. The higher time frame premise here is that the first stage is there as I showed you, but then after the first stage, you need to see a second stage. Right? And there's other things that you can add to it, other things that are here, right? We have the magnitude effect that is here as well. The magnitude effect, it suggests that a lower range or a smaller range Kriging correlation will be taken out by a higher range Kriging correlation, especially if that higher range Kriging correlation is followed by a lower stage Kriging correlation which agrees with the higher stage. Such as here we had a Kriging correlation at these lows, price moved higher, we had another Kriging correlation, right, which is a wider range. Then we had a second stage Kriging correlation, sequential SMT, between Friday and Monday, right? Another thing is that Friday typically in these areas, especially at all-time highs, right? Especially when you see price built up like this at these ranges. Price is consolidated at these ranges, especially when there is already a first stage, right? Monday will typically be the high of the week, right? Or the low of the week. That's just how it is. Many times you just see price opens, right? And the time that we use, right? Yeah, there's a lot of information that we need to cram right now. So the time that we use, right, is not EST, right? We use Switzerland time due to the fact that the markets actually open 12 a.m. Swiss time, right? So that's the actual marketing time that we use, right? So we believe that the market functions on this time, and that's the time that QT is tied into. Understand? So looking at Swiss time, the Asian session, it would be 12 a.m. to 6 p.m. No, 12 a.m. to 6 a.m., right? The London session would be for Swiss time, 6 a.m., 12 p.m., and so on. But when you convert it back to EST, right, we will be a hour ahead. Pardon, the screen freezed. So yes, we will be hours ahead, right? So 12 a.m. Swiss time is 6 p.m. Eastern Standard Time. That's something that you need to take into consideration, as if you don't understand that part, then everything else would be a bit confusing when you see the times. And the screen didn't freeze. I just wasn't doing anything on the screen, right? So this is the main thing that you need to understand. All right? You have a higher range correlation followed by a lower range correlation sequence SMT, right? If we have a news event, right, during this time, that will increase the likelihood, right? So what we do when we are inside a private mentorship, we always start with forexfactory.com, right? We filter out the red folder news events for the US dollar specifically, right? Because everything is connected to the US dollar, right? It's a system, it's an algorithm. Everything is based off of the US dollar at the moment right now, right? If the US dollar goes up, we should be expecting the euro and the Great British pound to go lower. If the US dollar goes up, we should be expecting the S&P 500, the Nasdaq, and the Dow to follow suit. If the S&P 500, if the Nasdaq, and if the Dow at any moment in time are not following one another, that would be categorized as low probability price action. That's when you're going to be anticipating consolidation. But that is not something that's bad, right? We need consolidation. We need to see price in consolidation for us to get our high probability correlations, right? Just as how at the highs right here, before this move lower, what had to happen? Price had to consolidate. After consolidation, what do they say? Right? You know, it's very vague what they say on the internet. They will go and they'll say, after consolidation, it's expansion. No, after consolidation, right? It's not just when should we expect the expansion? When? They don't tell you that part. After consolidation, there is expansion after there is a cracking correlation, right? And this is what you're going to always see occurring. Every twist and turn of the market, almost every high and every low of the market, every single week, every single session, every single hour, right? You're going to start to realize that these are the this is the reason and these are the things that allow the market to turn, right? That's it, right? Of course, there are specific times that are, you know, there, but for now, this is as simple as it gets for someone that's brand new. You want to jump into it, you want to backtest something that's not bullshit, something that actually works. You want to test it for yourself. Look at every high. Go back every single week, every high. You need a triad for the metals market, right? You want to look at the metals market. You can use gold, you can use silver, you can use platinum. You're looking at cryptocurrency. It's Bitcoin, Ethereum, XRP. You're looking at the Forex market, right? It's the dollar index, it's the euro dollar, and the Great British Pound against the euro dollar. And the Great British Pound against the US dollar. My bad. Right? So this right here is what you need to focus on. No order block. Right? We have not talked about a gap. Right? We're talking about time, but first, before we get to time, you need to understand structure. You need to understand the rules, the basic rules, right? What am I looking for? You need a two-stage cracking correlation, right? Do I just go in and look for any cracking correlation? How do I know which one is high probability? The ones which occur after there is after there's consolidation. And that's how you will get ahead of everyone else. So yes, with that being said, right, I have another meeting, right? So I hope that you found that useful, right? We will be back sometime, not really sure when, but right, I'll make it known in the chat. And again, right, if you have questions in the general chat, you can add me, right? If it makes sense, I'll answer it. Right? And with that being said, it was nice talking to you all.